December 1st, 2020 board meeting to order. This meeting of the Sugar Grove Village Board will be held as outlined in Public Act 101-0640, which waives the Open Meetings Act requirement that a physical quorum of elected officials be present to hold a public meeting in the event of a public health disaster declaration and a determination by the village president. Governor Pritzker issued a statewide disaster declaration on November 13th, 2020, and in response, President Shawn Michaels determined that an in-person meeting is not practical or prudent at this time. Ted is not going to be in attendance tonight, so Jen, would you please lead us in the Pledge of Allegiance?
I pledge allegiance to the flag of the United States of America and to the republic for which it stands, one nation, under God, indivisible, with liberty and justice.
Thank you, John. You're welcome. Roll call, please, Allison.
Trustee Montalto?
Here.
Trustee Conan?
Here.
Trustee Lendy?
Here.
Trustee Walter?
Here.
Trustee Heron?
Here.
Trustee Cook is absent, and President Michaels.
Here. Okay, we have a quorum. At this time, could I get a motion to adjourn to closed session to discuss litigation and personnel per exception of the Open Meetings Act, and we will then reconvene after our closed session.
I will make that motion.
Second.
Okay. Roll call, please, Allison.
Trustee Montalto?
Aye.
Trustee Heron?
Aye.
Trustee Walter?
Aye.
Trustee Lendy?
Aye.
Trustee Conan?
Aye.
Okay, and I agree to it as well. For those in attendance on the phone call, we have 3 attendees and no one is here in person. We apologize for the delay. I believe the meeting will be continued on, but the board members are going to sign off and go to closed session. Then we'll come back on and right after closed session. So, if the board would please adjourn to closed session. Okay, how are we doing? Is everybody back in attendance? Heidi on?
I am on.
Okay, Heidi, thanks. Okay, may I get a motion to reconvene the general meeting?
I'll make that motion.
And are we? Okay, we are recording. Thank you. Allison, would you do another recall or roll call, please?
Yes. Wait. Trustee Montalto?
Here.
Trustee Heron?
Here.
Trustee Walter?
Here.
Trustee Lendy?
Here.
Trustee Conan?
Here.
Trustee Cook is still absent, and President Michael.
Here. Okay. For the attendees online, thank you for your patience and letting us adjourn to executive session and back again. I'd like to, there are no public hearings, so I will close that portion. No appointments or presentations. Any public comments on items scheduled for action? Under tonight's consent agenda, we have approval of the minutes from November 17th, vouchers, a proclamation regarding impaired driving prevention month, a resolution approving a professional service agreement for engineering services, a resolution approving a settlement agreement, another resolution approving a settlement agreement, and then under general business, we'll talk about the tax levy, abating debt service, and then go into discussion items. Any public comments on the consent agenda or general business items?
So again, just to the 3 people who are on line, if you want to use the raise your hand feature to Becky, Holly, or Jim, and then I will unmute you if you want to speak at this time.
Okay.
Oh, Jim raised his hand, so I
Okay.
will unmute you, Jim, and if you can unmute yourself now, Jim, and you can speak.
All right. Hey, good evening, everybody. Hey, I just want to let you know that I'm on in case you had any questions about the solar panels later in the discussion. So I'll table it till now or till then.
Okay. Thank you, Jim. Okay. There's 2 other attendees online. Becky or Holly, any comments? Hearing none, we'll close that portion of the agenda. May I get a motion to approve the consent agenda?
I'll make that motion.
Second.
Mr. Aaron, second. Any request to remove an item from the consent agenda? Hearing no request, roll call, please, Cindy, or Allison, excuse me.
Trustee Montalto?
Aye.
Trustee Heron?
Aye.
Trustee Walter?
Aye.
Trustee Lindy?
Aye.
Trustee Koenig?
Aye.
Okay. Motion carries. Thank you. I thought it might be best if we moved up the discussion of the mid-year budget before we got into the tax levies so we can discuss those. So if everyone would, please go to the budget discussion that Matt prepared. Where is it?
Under staff, I believe.
Yes.
Should be under the discussion items.
Okay. Hopefully you found them. All right, Matt, very nice memo. Would you mind starting the discussion on this?
Sure. So we are through 6 months now. I mean, now we're through 7, but this is through a 6-month projection. So the memo is broken down by funds, generally focused on you're going to be general fund and water fund. Going through the general fund, we have anticipated the receiving the CARES funding, which is $581,790. So there's a couple different calculations that are done with this, including that money, since it will be coming in as revenue, but also just looking at it from how we budgeted as a village without getting that money. So obviously the revenues are going to be anticipated higher by about 621,622, but 581,790 of that is the CARES Act funding. Our expenditures are expected to be a little bit higher than budgeted by approximately 13,500. So with the CARES Act funding, we are projecting a surplus of about $555,000. As compared to when we did budget a deficit of $53,600. If we were to remove the CARES Act funding as revenue, then we would be still running a deficit, but decreasing it to only about 27,000 rather than the 53. So some large changes that you're going to see as far as revenues. Utility taxes are anticipated to be below. Again, this is telecommunications continually goes down on an annual basis. And natural gas is down a little bit. That's due to milder weather. We haven't had a cold yet, so we're anticipating a little bit less on revenue for that. Income tax is actually anticipated to be above by about 72,000. The IML numbers that have come out haven't really shown a decrease. What they're anticipating is they're going to be seeing more of a decrease next year, because when unemployment starts to run out for people, if they are continuing to be on unemployment, then you'll actually see the larger decrease in income taxes. So a lot of municipalities are anticipating that to be next year. Again, grants are going to be over. That's where we have to account for the CARES Act funding. It is considered a grant under the federal guidelines. So it is subject to a single audit at the end of the year if we were to expend over $750,000 in federal funds. State sales tax, we are anticipating about $49,000 higher than budgeted, despite our conservative budget with COVID. That we are seeing is that the business base is helping the village. The large companies and businesses that had to shut down, the village did not have a lot of those sales tax generators, car dealerships, et cetera. And fast food and gas stations, which were essential businesses and stayed open. Some see a decrease, but some have done just as well as prior to COVID due to being essential. The use tax is projecting over as well. This is something that is hard to anticipate because it's based on out-of-state purchases and online purchases. And this was a large increases due to the new law by the state last year that required them to collect this tax when purchasing items out of state and paying and remitting back to the state of Illinois. Gaming licenses, which is our video gaming, is anticipated to be low. Those are still shut down. They only open for a little bit. So all casinos, all video gaming cafes, all terminals are shut down still. Our reimbursement account is projected to be lower by about $73,000, but what that is anticipation of the developer reimbursed expenses are also going to be lower. So the expense is going to offset the revenue side. And then energy civic contributions, that's the new municipal, the third party aggregation. We're anticipating about $6,000 because we didn't budget anything. That we'll start getting in February is when that program will start. Yes, questions on revenues? Okay, then I'll jump into the expenses. I'll go fairly quickly. Something that's kind of budget wide. We're medical and dental. We anticipated a 10% increase when we budgeted. It was only 8.1% is what came back. IMRF rate did increase due to a change of rate of return, and we anticipated at 7.75, but it was 7.89 is our final rate. Training and memberships across the board are going to be lower. There were a lot of cancellations, nothing happening with COVID, so a lot of those trainings and conferences did not happen. Insurance premium, that account is going to be above budget due to these the approved settlements. Although we did get our renewal for next year, and it did go down by about $30,000 for the actual total premium on an annual basis. The equipment replacement fund was funded at 50% in the original budget. The numbers that you are seeing right now do have it at budgeted at 100%. So we will increase that to be able to fully fund the equipment replacement for the year. Kind of just going through quick, in administration, legal is going to be over. A lot of these are expenses due to additional work with COVID that we've had throughout the entire year. Police department, part-time salaries is a large decrease, about $88,000, and overtime is staying about the same. What we're seeing is not a lot of shifts have needed to be filled. Not a lot of people are going on vacations, so those shifts didn't need to be filled. So that is a down account. Specialized supplies and police is going to be over budget by about $31,000. This is where the village has been expensing all of our COVID-related supplies and equipment that's being handled by the chief through his department. So he's dispensing all masks and disinfecting and PPE equipment. So that's where that's going through, and it is being tracked separately through our accounting system. So we do have a number that is how much we have spent through COVID. Some things to go through. In the finance department, we are over in audit services. This was due to the police pension fund determining they are not going to be doing their actuarial study on their own, which they have in the past. It is a requirement, so we had to take that on as a village. So we'll be over, and that'll be something we'll continue to fund from the village.
Matt, could I ask a quick question before we get too far away from it?
Yes.
Number 3 under police department with the part-time salaries and the lack of taking vacation, personal days. What is the policy? I'm not familiar with it in terms of those being used. Are we talking about this budget being less throughout the year, or do they have to use this by the end of the fiscal year or lose it, or can they accrue it?
They can accrue vacation time and personal. They accrue vacation, personal, and sick. They can have up to a max per their contract, and it's based on how many years of service they have. So they don't lose it by the end of the year.
Okay.
They can accrue and roll that over till the following year.
So this is something we're doing good this year, but we're going to pay for it next year. So leaving out.
Well, yeah, essentially we budgeted for part-time on an annual basis based on what we anticipate usually for filling shifts for people on vacation.
Okay.
So this year it is really a savings, and we may pay for it next year, but we don't anticipate it going up by $88,000.
Is there a payment option? Like if guys choose they don't want to take a vacation, can they just take the cash instead of it?
Per their contract, they do have, if they have a certain amount of vacation in their bank by the end of the calendar year, they're able to have a buyback into a retirement account.
Okay.
So, yeah, there are options for them to do that as well.
That's it.
Okay. Any other questions regarding kind of general fund expenses on that? Okay. So the next section of the memo, it does discuss CARES Act funding. Kind of gives you a little background on how CARES Act funding was derived, coming from the federal government down into the states. There were 5 counties, I apologize, that received money from the state directly rather than having the municipality go through the state to receive their CARES Act funding. King County was one of those. They received $92.9 million. Just from the state level, this is not required for a county to share money with municipalities. They could have kept that for themselves. They did have meetings, and they did approve that 55% will go to King County, and then the other 45 is split between municipalities and a couple other programs, business loans, fire districts, library districts. And then that, based on what the municipality gets, is a per capita basis derived from CMAP's population estimates. That's what the state used on how each county would get their funds. So the villages was $581,790 on eligible expenses. Treasury guidelines stated that public safety is 100% covered under all payroll and benefit expenses. That is what the village used and applied for. That is what I would say 99% of every municipality applied for was through public safety. So these are federal guidelines, so that those, like I said, are subject to single audits. So with that, that's where we are getting the large unbudgeted surplus. So we have been tracking COVID-related expenses, whether it's IT, legal, cleaning services, the window out at PW's building to protect between the counters, PPE, disinfecting, cleaning supplies. So we've tracked those, and through November 30th, we've spent about $49,500 on those. We do have an additional expense of the $12,514 for the sterilization and UV machines that were approved at the previous meeting for the chief. And then we do anticipate about $10,000 to $15,000 more in cleaning supplies, disinfecting, and PPE to kind of get through the rest of the year, not knowing how this is going to go. So that is part of the budget as the projections as well. So right now we are not proposing any new initiatives at the moment due to the unknown of COVID until that has some more certainty. And we will discuss that during the 21-22 budget at that time, which is in March. the question regarding, I guess, COVID, I can go in a little bit more on expenses if that's something we need. If there's any questions.
We've talked about maybe improving the village boardroom for future meetings. Would that be an expense that we might do this year with the large surplus that we're looking at? Have we looked into those type of expenses?
We have. Allison is in the process of working and trying to find companies that work and do that with us and Jeremy and kind of coordinating that. So we are still looking into that. Just nothing has been decided on what to go forward with that surplus is.
Okay.
Any other questions on general fund or CARES funding?
And out of the budget discussions that we had last February and March, we've gone through that list and like the full funding of the equipment replacement. We've addressed any expenses that were sort of on the fence that we did not incur because we were running a deficit at that time.
Right, yeah. So the main one is the equipment replacement. That'll always be the number one that gets added back into the projections when we see that. So that's what is in this projection currently.
Okay.
Matt, I got a quick COVID question, as long as we're talking about CARES funding. Because listening to the news, it sounds like we're literally weeks away from healthcare workers getting, vaccines, and then followed by first responders and this, essential workers. Is that something, if there's cost involved in, vaccinating the employees of the village and stuff, is that something CARES will cover also?
It would be an eligible expense, yes.
Okay. And and this may be off the topic a little bit, but have we discussed setting up any kind of a process for that once it's released?
We have not internally. I know that.
Okay.
Not much information. Chief may have more information than I would have on a vaccine or anything rolling out. But as far as CARES Act funding, yeah, that money is already reimbursable. It's 100% covered through public safety. So we could use unbudgeted surplus money if that was deemed the appropriate use to do some type of vaccination process if that's what we wanted. But as far as CARES Act, I want to kind of that is already grant eligible under public safety when we're looking at it. So we've already been reimbursed and spent that. So it's created surplus that we'll use for these types of initiatives.
Okay.
All right. Thanks, Matt.
Yeah.
I just want to clarify one thing, Matt. The number of 554,000, that's with the equipment being fully funded?
That's correct.
Okay.
Yeah, I know it's kind of tough to having the chart and then my memo, because that kind of gives you some of those numbers as well when you're looking at the Excel spreadsheets at the end of the memo. So that kind of covers the general fund. The other funds will go fairly more quick. General fund, again, we're projecting revenues to be higher. That's due to adding back the 50% of unfunded equipment replacement. So we are expecting the revenues in the general capital projects fund to be higher than budgeted. TIF, we're just anticipating property taxes being above budget, and expenses in that fund are strictly just the sanitary sewer extension study that is being completed. TIF 2, slightly below what we budgeted for property taxes, and the expenses are going to be under budget since there will be no additional legal work done with the TIF, and that was in there for any additional for the extension, but that was completed all last year. Okay, so getting capital infrastructure fund. So this is going to project a deficit of about 801,000. Now we do have the fund balance in there, and I'll get into that. So the road program that we approved initially back when we approved it included the Rebuild Illinois Capital Bill, which was the one-time payment of roughly $592,938. So after that was approved, the circular came out from IDOT on what was eligible, and the projects have to be bondable. So that's a life of 13 years or more. And with that, that's essentially just a reconstruction of a road, because resurfacing and microsurfacing does not have that useful life. So that money had to be taken out of the money that we had for the program, but we had the fund balance to still fund the full project. So that project is fully funded for the road program. And as stated, even after the deficit of the $801,000, we'll have a fund balance of roughly $2,073,000 within the infrastructure fund. So like at the last meeting, we talked about the road program. That's how we anticipate still being able to do a road program next year, is using the fund balance to complete that project this year without extending out the MFT. The Rebuild Illinois Capital Bill, which is the grant money of the $592,938, we receive 2 payments annually for 3 years. So we won't have that total for 3 total years. So it'll be the end of the fiscal year 23 budget that we're going to have the total money. At that time, the eligible projects are going to be anticipated in 2022 following the CMAP funding pavement analysis that's going to be completed. So that's when we'll discuss what projects will be completed with those funds. So we'll have to hold on to those funds for a little bit longer until we can get the total from the rebuild grant.
I have a question, I guess, for Tony. Does he have some roads in mind that in 3 years are going to be eligible to be rebuilt?
Yes. The program we did this year could be considered bondable, but there's a whole separate process that it would take to do that. But we're in the process of getting paperwork to get that road analysis grant from CMAP. So one that rates all the pavement in the village, we'll use that to put together. That should give us a 5-year program for road construction. So at that time, with that, we'll use that to identify and to have programs that are eligible to use those Rebuild Illinois grant funds on.
Okay.
Okay. Any other questions? The next fund is just the SSA number 10. That's the one we have not been levying taxes for. We're using the fund balance for. So that doesn't have any revenue going into it, slight interest. But we're expecting to spend about $8,000. We are not anticipating to have to levy for that SSA again this year. Water and sewer fund is next. So revenues, we are anticipating to be above budget by about $327,000. What we're seeing is a huge increase in usage village-wide for the last 12 months. We have had a lot of new pools. We've had, especially with COVID, we've seen an increase in household usage due to people being home more often than they normally would be. So we are seeing a huge increase in water usage, just on an anticipation about 1,500 additional 1,000 gallons per resident. So per account, we're anticipating that as an increase in usage for revenues. It is a large increase. So that's why the revenues are higher is strictly water usage. PW admin department within water and sewer will be under budget. We did have a full year for a labor position that was open, that was vacant, that was budgeted for, but not hired until just recently. So we had to reduce that by 7 months that we have not paid. So that's why it is under budget within the PW administration. Water and sewer, for water operations, electricity will be under budget. We did get new aggregation for the year, so that has helped keep our expenses down for pump stations. And then the water capital is going to be under budget by about $47,000 for the replacement of the utility truck. And that was due to having to replace the actual utility box on top of the truck. So it saved a significant amount of money by just buying the truck and being able to remove the tool box from it, the utility box from the truck, and put it on the new one. So with all of this coming in, we were anticipating already about a $459,000 surplus already, but we are now anticipating about a $926,000 surplus. And that's high water usage, lower electricity, lower vehicles, just expenses coming down. And this is also with a 0 water rate increase. So it's for the fiscal year. So we were able to keep everything in line. Revenues increased and expenses went down.
Matt, I think this fiscal year, we created a new line item for emergency repairs, and we budgeted about $25,000 for that. Have we spent any of that?
No, we have not spent any of that yet. That money is really budgeted for the winter when we have water main repairs. That's when we anticipated and saw a lot of those increase in emergency repairs happening. So cross our fingers, but we're getting into the winter, and that's why with these expenses, water mains, you never know. So we are anticipating a good surplus, which is good, but pray that we won't have a bad winter. So, and just a reminder, that is including the 2 new transfers that we were doing for the water meter replacement program and also the infrastructure. Those are also included in here at fully funded. So that is including those.
Okay.
The last is, again, water and sewer capital fund, which we are treating just like the general capital fund, but for the water fund. So this is being transferred for new equipment and vehicles being purchased, as well as just the infrastructure replacement, just to have money put away for larger projects if needed, as well as the water meter replacement program.
Okay. Very good report.
I had a quick question for Tony on the water usage. I was just curious, since we had a lot more use of the water, our equipment and everything is all up. You don't have any concerns about any of our equipment getting overused than we anticipated or anything like that?
No, there's no problems at all with the system and keeping up with that use and capacity. So we still have reserve capacity. We're
okay.
Good.
That you put it better than I could ask it, so thank you.
Okay. Is wall number 10 back online?
No, those parts were delivered today. Oh. So hopefully by the end of this month, it'll be completely back in service. That's the current plan.
Okay, good. Any questions for staff regarding the financial update or the mid-year budget update? Matt, can we do a 3/4 of a year at, I guess it'd be the second meeting in February, to bring us up to speed on expenses at that time, see if there's any significant changes?
We could if you would like to, but if we're going to do the February one, we'll have budget workshop will be the first one in March. So okay. You'll see any updated projections will be made and presented with the first round of budget at the workshop. So we could if you wanted to, but another meeting, we'll have it at the first meeting in March is anticipated for the first budget workshop, which will include new projections if there are any for this current year.
Okay. And we get the monthly treasurer's report so we can monitor it. And you do a good job at doing the summary and identifying any extracurricular expenses that are exceeding budget. So, okay. Any other questions? Okay, thank you very much.
Mhm.
All right, going back to the agenda, may I get a motion to approve the ordinance for the tax levy for fiscal year May 1st, 2021 to April 30th, 2022.
I'll make the motion.
Second.
Okay. Probably need to get to that page. Ordinance, tax levy. That's mallard .1.
Just for that.
Yes. Okay, this would be the proposed 2020 tax levy totals is $3,930,000. Tax levy includes the $1,054,763 in bond and interest payments, which will abate, and then the levy request during the extension process per the tax cap is $50,912 or 2.87%. Discussion on this? In lieu of our budget surplus for this year, and I know it's a minor way to help residents out, but I'm thinking that we approve a lower amount than the 2.87% tax levy. I would like to take into consideration new growth and see if we could increase the levy by that amount. But Matt, I don't know if you're able to identify that, estimate.
See, so yeah, after the last meeting when we talked about this, I did get a hold of the county, and they are not able to give us a for sure EAV number. Everything is still estimates. They have not finalized anything. So no matter what number I come up with, it's always going to be an estimate. They don't have any finalized numbers. We will get sometimes in January, February around, we'll get the finalized assessment for the EAVs. So based on that, on estimates, we had to plug numbers to try to get to our tax rate, essentially, to determine how much we believe the new construction will be. We also don't have any numbers on any annexations or de-annexation numbers. So we don't have those numbers to add in or to subtract. They don't give us those. So everything we have is an estimate. I'm able to get an estimated number based on what the county can give me, but nothing's going to be perfect with what they're going to give me. So that kind of answers the new construction part is it's going to be an estimate.
Do you have a percent what we would need to raise the levy to take advantage of new construction?
So percent wise, it's somewhere around about 1%, 1 to 1.2, based on what I have as an estimate. The total amount that we're coming to with an estimate is about $16,000. But again, an estimate that I can't come back to. But what I will say is, just so everyone is aware, I understand if we're trying to capture new construction, but I will say even if we did a zero and we did the same thing as last year, everyone's individual tax bill will change. That is something that the village does not control no matter what we levy for. Assessments are going to go up or down and your tax bill will change. So I don't want anybody to think that just because the village left it alone, that your tax bill is going to be the identical tax bill that you got last year. Because no matter what we do as a village, the assessor is making assessments and changing values. So if people are are going to be listening and thinking everything should stay the same, that's not going to be true for even just the village portion. We don't control the entire bill either. So this is strictly just affecting the village portion of that bill. And I don't want people to get confused and think that they're going to see a bill that's identical for the village portion from this year.
Valid.
I would encourage residents to look at their property tax bill from 2019 to 2018 and see where your assessed value is. And if people are paying close attention to their tax bill, they're going to see that the tax rate changed and the tax rate went down. So in a lot of cases, if your EAV didn't go up a ton, your property taxes dropped. So as much as we're talking about $50,000 to the village, and everybody might equate that to, well, my bill is going to go up. That's not necessarily the case. So look at your own property tax bill. I think if your property is in line and assessed properly, you might not see a change. You might see your bill go down. And the folks that are not assessed properly might see a change and they might see their bill go up. But I think what we did last year before we knew about COVID and we didn't raise the water tax rate, that saved the village. Considering the fact that usage is so high, we saved those residents quite a bit more than this $50,000 spread over the village is really going to look like. So that savings was there. I think we did right by the residents. And I think that there is a discussion that we all should have on surplus money and if there's a creative way to use some of that surplus for our residents. But I would support the property tax levy as proposed.
Okay. Any other discussion?
Yeah, I know it always looks and sounds a lot worse than it really is. How many households do we have in Sugar Grove? Is it around 3,000?
Yeah, I mean, I can go based off of water accounts, which is about 3,200.
Okay. So it's somewhere.
I think it makes about $22 to $25 a house is what it was.
We've for a number of years used the home of one of our former village officials as kind of a typical house in Sugar Grove, and based on the EAV of that house, we would estimate the increase to be about $13. And that house, we're comfortable with it being typical. We looked at what the Census Bureau has said a median home value is, and it was pretty close to that, and certainly less official, but maybe reasonably accurate as well. As the popular Zillow tool has a number out there that's very similar as well. So if you go off that, and it's right in the $300,000 estimated value range as a quote typical or median home in the village. So obviously, if your house is double that, the projected, and understanding both, what Matt said, that each situation is potentially different. It's what your EAV does compared to the prior year, also compared to everybody else. But, if you're at 300,000, we're estimating about a $13 increase of the village portion.
A little more than $1 a month.
Well, at 100,000, if the EAV's 300,000, you divide it by 3, it's 100,000. And 100,000 times 2.87% would be $28. Would it not be closer to $28?
Matt, help me out. I think we did the math and it came up with the 13 and it made sense.
Yeah, essentially what we did is we took that sample bill and increased the village portion by the 2.87%, which was the $13.28.
Okay.
Yeah, for those of you that have been on the board for a long time, you've heard this before and are probably tired of it. Kind of like Rick gets tired when I bring up potential revenue sources each year. But one of the unfortunate things in Illinois is how the tax cap system works, where if the next year's taxes are always based, the levy is always based off the current year. And so it's it's limited by CPI or 5%, which is ever is less. So the unfortunate part of that is, taxing bodies such as the Village of Sugar Grove that are under the tax cap regulation, if you don't increase your property tax levy, in any given year, or you reduce it by less than what's allowed, that becomes your new base. So what happens is, if you did no levy increase this year and forego the estimated 50,000, it's not just a 1 year reduction in your property taxes. That 50,000 carries forward every year until such time the village would hit home rule, and then you would have the opportunity to increase it greater. And home rule happens at 25,000. Actually, it was Sugar Grove. We had proposed several years ago through Metro West to try to change the state law, where if in a particular year you didn't levy the what you were capable of, that your base amount that you do future off of would increase. Because the idea would be then that would give you and any other governmental body that's under that the opportunity to say in any given year, hey, we don't want to do the full tax increase this year, and it wouldn't hurt you going forward. Unfortunately, that idea did not get passed. Maybe it's time to reintroduce it. There's certainly some changes down in Springfield. Maybe there's more of a willingness to entertain legislation like that, but certainly understanding the desire to limit it, to reduce, the property tax burden on our residents and businesses. I think that it's appropriate to point out that the long-term impacts of that, and village costs do go up every year regardless of what we do. And this is in no means picking on them. And Chief and I talked about this earlier. It's just a reality of, again, this year, police pension cost, the minimum required is going to go up by $60,000. And then if you add on there, the contractual salary increases, which certainly aren't absorbent within that department, and the projected insurance costs, you're roughly about $90,000 in that one department alone. Next year anticipated increased expenses, and certainly we hope to have another good year as far as sales tax growth, and hopefully the shared revenues from the state do well also. But it is one of those ones where it's a little there is concern there with doing a limit, but understand the desire to do it. Certainly, I think it's if it's able to be done, it's a fantastic effort. But I just don't know, at least from a staff perspective, that it's the most prudent thing to do.
And you said it's not just the $50,000 isn't just residential; it's also commercial.
Yeah,
it comes from every rooftop, I guess.
Yeah, it's a combination of all the existing and quote new growth. It's the everything included.
Okay.
Matt,
I would support it as proposed. I think I would support it as proposed as well.
Matt, looking at the CAFR, we're paying off a bond January 1st, 2021, and that bond payment's $300,000. Do other bond payments go up next year when this rolls off, or does that $300,000 get rolled into the general fund?
So that's a water fund bond, so that will not affect the general fund.
Okay.
So, but nothing will go up because of that. That one is just expiring, but that is going into the water fund, not the general fund.
Okay.
I think everybody should be reminded that without CARES Act, we were still in a deficit for the year. And there's plenty that needs to be done within this village, and to forego $50,000 worth of growth when there's other ways to save the residents money, I don't know how we go against that. That's just my personal opinion for what it's worth.
Matt, with the CARES funding, is that earmarked? Does it have to be spent towards specific things, or can we just fit that anywhere in the budget? It's specific things, right?
Yeah, so CARES Act funding, again, is based on what your eligible expenses are that you applied for, which was public safety salaries. So that is what that was budgeted and eligible expenses for. What that did is create an unbudgeted surplus because those were being funded through other revenue sources. So CARES Act funding, that's why I was saying CARES Act funding is spent. What you need to think of is we have an unbudgeted surplus now. CARES Act funding is separate than the unbudgeted surplus. It creates, but that's what we're using for any initiatives we would like to go forward with, if that's something that we talk about. But CARES Act itself is for public safety, and that's been spent in the last 7 months or 8 months that we've had COVID. That'll be covered. Essentially the coverage is March to August 31st is what those eligible expenses we're covering. That's how much our salary and benefits were for that period.
Yeah, if I can, I think it's a valid point that the CARES Act funding was a one-time revenue source. I think it's only fair to also talk about the one-time expenses, which certainly were only about 10% of that. Matt talked about them earlier. So I think if you eliminated the CARES Act funding revenue side and the COVID expense side, I think we're projecting this current general fund is about $30,000 or $40,000 surplus.
It'd be about 50 if you removed CARES Act funding and COVID expenses. You would surplus about 50 rather than the deficit, because we have a total anticipation of about $77,000 in COVID expenses up to that point and going forward. So if you were to just eliminate COVID, which we all wish we could do, and eliminate that from our budget, that's what we would be at, is about a $50,000 surplus for the year minus COVID and CARES funding.
And and so I think that's certainly positive, but a $50,000 surplus 1 year, I don't believe that is something we can count on. And unfortunately, we haven't had significant surpluses, I don't think, for a few years. But historically, when we were really running some pretty nice surpluses, the board would take a good portion, if not all of that, and transfer it into the road fund. You just approved the road program for next year. And Tony, I might need your help a little bit here. And I know we're going to do the pavement analysis through the grant, but I believe on that kind of top 10 of consideration list, was it 3 subdivisions that you're projecting in the next few years should be resurfaced at well over $1 million each? So I think that's one. Yeah, so I think that's important to remember, is that our revenue sources for road repair, from MFT dollars to the road maintenance fee to some of the I guess those are the 2 main ones. But we like most municipalities, I think we actually do better than most. We're still short of what the analysis says that we should be doing every year. And I think we do an excellent job with the revenues that we have or funds available. But if we're fortunate enough to have larger surpluses in the general fund going forward, I would anticipate the board would again look at doing transfers into the road fund to help supplement that as well.
Well, just if I could, I've been listening to this, and we go through this every year, and it's unfortunate, but the tax levy is a necessary evil. I know I took heat last year when I said it was, basically a cup of coffee, and that's what it comes down to again this year. It's about a cup of coffee a month out of your pocket. But the argument that we get back from the citizens who are not happy with the tax levy, if they don't understand, how much it is and what it goes for, is we should be able to budget better. But the bottom line is we are budgeting better. Our expenses go up more than the tax levy, and we're budgeting our money better to make that work. So it's a combination needing both. And at this point, I'm in favor of moving it forward. And I know it's a bad year COVID-wise and people out of work and everything else, but the bottom line, if we're looking at improving roads in neighborhoods and doing it like Jen said, what can we do to help people maybe put money in their pockets down the road or whatever? Homes sell for higher prices if the roads in front of them look good, if the trees are trimmed, if the street lights are all lit, if things are maintained, which puts money in your pocket that way, it gives a better quality of life. So, you hate to raise taxes, but this is that annual, nut we have to get over and move forward. It is only $50,000, but spread out to 3,200 homes, and it affects the new businesses coming in. We don't want to give away that money either. So I think it's a smart thing to do. So.
I don't think anybody wants to do it, but yeah, you
Well, nobody wants to do it, but it's a necessary evil.
Yeah. Well, that's where I felt this year was a good year to do it with the surplus that we're projecting. It's significant, and we had 4 or 5 pretty passionate letters or emails during the public hearing by residents talking about how tough it is. And, we went into a lengthy discussion at the beginning of the budget year about raising the water rates less than 1%, which was less than a cup of coffee. And, it was a good decision because of the extra revenue we have. And I think, of all years, this is a year to help the residents out with their tax levy. Okay. Any other discussion?
What Matt's saying, even without that CARES Act funding, we were at like 58,000 surplus, but we're only halfway through the year. Who knows what's going to happen in the second half? We haven't had snowfall yet, or equipment breakdowns, or things that maybe aren't budgeted for.
Water mains.
Yeah, and those are anticipated in the remaining budget. They didn't eliminate that expense completely. We still have a line item for salt purchase, things like that. So, our expenses could go down.
How many, I know typically, I'm not sure if Pat could answer this, but typically, there may not be a lot of uniform purchase the first half of the year, but maybe the second half of the year. As guys are out directing traffic, burning their clothes with flares or whatever, when the roads get bad and we start having more accidents, sometimes you get more equipment purchase too, more clothing purchases. So, this isn't the first year where we've had something and then the second half is using it up, because it's kind of the way it works with some budgets.
Yeah. Okay.
If I may, I certainly appreciate, where everybody's coming from on this. And one of the ideas that I think some of the board members have talked about before and have touched on it tonight is with the projected surplus. Is there an appropriate method to try to help out, the community? And I'm using that word intentionally because it gets pretty complicated pretty quick as to how you want to define community. And whether that's all residents, if there's a way to identify those in greater need, it's businesses. So I think, from a staff perspective, we'd certainly, be happy to support any type of discussion of various types of efforts as those, where we would just look at it as more with the surplus as trying to do something that's truly more of a one time at this point than something that has, ongoing impacts. And, if the board's desire, we certainly can, try to present something to facilitate a discussion on that issue, if you'd like. Or
Brent, at the Metro West meeting that was online 2 weeks ago, a number of mayors talked about trying to come up with a grant program. And every time they came up with one, it was very hard to identify one that was general enough to help out all businesses. And what they basically came down to is businesses that need funding should apply for, I think it's the big grant through the county or through the state. Elgin, Aurora, North Aurora, Geneva, and Batavia, they all tried coming up with a grant program, but really could not come up with one when they started putting down the specifics. So, I like your comment, but it seemed like the not raising the tax levy was a one where it helped all businesses and residential owners the same on a proportional basis, as opposed to coming up with a separate grant program that would probably cost more than $50,000 to administer.
Yeah, I think it's, we've had quite a bit of conversation, at the staff level on different approaches. And, I think a lot of it depends on, like most programs, what is the true goal? And if you're talking about doing something, super broad, one, it gets very complicated very quick. And two, the impact of it on any particular individual or business, can get very small very quick. I mean, with 3,200 homes, and that's not even getting into the businesses, if you did, $50 a house, well, that's $160,000 right there. And, and not that everybody wouldn't appreciate $50. My personal thought would be is if there's a way to identify, if we're talking for a moment on the residential side, if there's a way to identify people that are really struggling, providing them with a more significant benefit, if you can, I think would go further than, and there's certainly, it may be the smaller number, but there's certainly people in the community that, that aren't struggling financially through this, that, they've been fortunate and that their jobs are doing well. And certainly, some people, may not be COVID related, but I'm sure if you're in the mortgage refinance business, you're probably doing spectacular based on everything I read here in the newspapers. And I think that it's somewhat true on the business side as well. We certainly know there are some businesses that are struggling, but we also know there are other businesses that have had their best year ever. And, just something, these are just thoughts we've kicked around. And, I don't want to say it's an exclusive group on the business side, but, I think it's reasonable to, feel that restaurants, are one of the groups that have probably been hit the hardest. So maybe that's an area to focus on. And, on the residential side, I don't know what the, proper way, if you wanted to go that route, to identify people who have been hit harder is, but maybe that's something that can be done as well. I certainly don't have the answers tonight. I don't want to pretend that I do for that type of a program, but, if it is something the board's interested in, it certainly could be, put on for a discussion item.
Again, that's where the mayors were talking, the staff were, then what type of application process do you have? Do people have to turn in financial statements from years past to show that they're having problems this year, and businesses as well? So, and then it quickly came to, if the county has a program such as big program, there's lots of funds available. I think it's $8 million, and more than half of it's still available. Have the businesses or the individuals apply at the county. We don't want to duplicate their process. And that's what was discussed at the Metro West, and it made a lot of sense because I was thinking of a program for restaurants, but it's hard to certify those or get them to qualify.
Yeah, I mean, I guess, I don't want to belabor it too much, but, you can look at it the other way too. And you look at the federal PPP program, and I'm not saying that was good or bad, but certainly there wasn't really much to say whether you needed the money or not. My understanding, people filled out a relatively simple form and said, I need the money, and there was no verification. I'm not saying we should follow that model.
I think the banks had to verify it, and you had to submit payroll expenses, so there was some process.
Right. Okay. So anyway, but yeah, I think that certainly, I mean, even if you want to do something broad-based, I think, yeah, whether it's a credit or something on utility bills or something that's more of a one-time versus a continuous, impact going forward, just be my position. And I fully recognize I don't get a vote, so.
Okay. Any other discussion? Okay, roll call, Allison.
Trustee Heron?
Aye.
Trustee Montalto?
Aye.
Trustee Conan?
Aye.
Trustee Walter?
Aye.
Trustee Lindy?
Aye.
Okay. Motion to approve ordinance for tax levy of the Mallard Point Special Assessment for the fiscal year May 1st, 2021 to April 30th, 2022.
I'll make the motion.
Second.
Okay. Any discussion?
I think this is an area where we could really save the residents of Mallard Point a lot of money. However, being one of them, it probably wouldn't be appropriate for me to suggest that.
Okay. Any other discussion? Hearing none, roll call, please.
Trustee Montalto?
Aye.
Trustee Heron?
Aye.
Trustee Lindy?
Aye.
Trustee Conan?
Aye.
Trustee Walter?
Aye.
Okay, motion carries. Motion to approve a resolution declaring a notice of ninth installment accrual of interest and adoption of the special assessment supplemental bond and procedures act.
I'll make the motion.
Second.
Okay. Discussion? Hearing none, roll call.
Trustee Montalto?
Aye.
Trustee Heron?
Aye.
Trustee Walter?
Aye.
Trustee Lindy?
Aye.
Trustee Conan?
Aye.
Okay. Motion to approve ordinance abating the 2020 taxes related to the debt service of $5,460,000, 2013 A general obligation refunding alternate revenue bonds.
Motion.
Second.
Discussion? Roll call.
Trustee Montalto?
Aye.
Trustee Heron?
Aye.
Trustee Conan?
Aye.
Trustee Walter?
Aye.
Trustee Lindy?
Aye.
Okay. Motion approving the ordinance abating the 2020 taxes related to debt service on $3,100,000, 2017 general obligation alternate revenue bonds.
Motion.
Second.
Okay. Discussion? Hearing none, roll call, please.
Trustee Montalto?
Aye.
Trustee Heron?
Aye.
Trustee Lindy?
Aye.
Trustee Conan?
Aye.
Trustee Walter?
Aye.
Okay. Next is residential solar panels. Is Walter with us tonight?
I am.
All right.
Can you hear me?
Yes, thank you.
All right. A little background. As the board may remember, we had a number of residents approach the board at a board meeting about making changes to the solar regulations, specifically to allow the solar collectors to be placed on roofs that face the street, which right now are prohibited. And the board directed us, village staff, to begin researching possible responses to that. Well, in the process, or while we were doing our research, we had a vendor make application to provide or request an amendment accomplishing that request that the residents asked for. So we responded to that, held a public hearing. The Plan Commission discussed it at length and in great detail. As I indicated in the board report, as you may or may not know, Commissioner Eckert has experience with this technology, not only the design but the implementation of it. And frankly, the Plan Commission benefited from that insight and that knowledge. While we, I also want to add that the Plan Commission wants to make it clear that they're very supportive of the technology and all the benefits it brings to the community at large. There are other issues that need to be addressed, primarily the appearance of these systems on the front of the house. And there are considerations that need to be taken into consideration that we had not up to this point. Specifically, the the solar collectors, they're not all created equal. They have a tendency to fade at different rates, even those manufactured by the same company and installed by the same vendor. They're all going to age differently and fade differently, and just make the roof less than desirable in appearance. The other thing we learned is that I guess the manufacturer of these devices is somewhat inconsistent. So there's no guarantee that when a collector needs to be replaced, and they will need to be replaced. I think that's something that we overlook when we think about these things, but they fail. It's just inherent because of the manufacturing process. And they also can fail because of damage, either from the weather or thrown out on the roof or whatever the case may be, or just faulty installation as well. So the question of replacement came to the front of the discussion, and the Plan Commission, I think, went back and forth on the issue, and in the end, decided that if the appearance of buildings, whether they're residential or commercial, is one of the features or characteristics of the community, why do we want to take a risk of allowing this technology to be placed in locations that we easily seen and could easily become unsightly in the future? So the Plan Commission is not supportive of the change that was proposed. We did discuss other changes to the solar regulations, specifically as it relates to the application process. Specifically, there's a requirement for a demolition plan with solar applications. And as we've been administering the regulations in light of the new state regulations for solar installations, one of the difficulties we've had with virtually everybody is this requirement for a demolition plan. And to make a long story short, the demolition plan makes sense for the large scale operations like a community solar project or a solar farm. But on a residential application, the demolition requirement is somewhat onerous. And the other thing that we have to bear in mind is that the individual or the resident that gets the permit to install the solar collectors isn't necessarily the one that's around when problems arise on the property. So a future owner of the house is going to be burdened with the removal of the solar collecting devices that may be on the roof. So the Plan Commission was a little receptive to the idea of removing the removal requirement, but in the event that the solar collectors are removed from a roof, then the roof has to be restored to new, because the portion of the roof that's covered by the collectors is not going to fade as the exposed portions of the roof are, and so that would also be an unsightly, an unwanted situation in the future. So the Plan Commission's recommendation is kind of a mix. They're not supportive of allowing solar collectors on a roof facing a street. They are supportive of making modifications to the application process and the requirements for the application, specifically with the demolition plan. And we also clarified insurance requirements to make sure that the homeowner has proper insurance in place to cover the replacement of solar collectors if they're damaged or destroyed. So that's where we're at. So we're looking for direction from the village board, how you want us to proceed in preparation of the necessary ordinance to make changes. And so with that, I'll stop and entertain your comments.
Walter, I have a quick question. The comment about them not being seen from the street. What if you have a unique situation? Because I know of a house in our neighborhood on Cobbler that has solar panels. There's a couple actually. Some have ground mounted ones that are kind of like bleacher set up in the backyard, but there's another one that has them on the back half of the roof. But the front of their house faces Cobbler, the back of their house faces Prairie. So there's a street on either side of the house, so technically you can see the solar panels from the street, even though they're on the back half of the house.
Yeah. That I would have to say that was an administrative decision when the application was submitted, because in that particular case that you're talking about, they wouldn't be able to have solar collectors anywhere on the property.
Yeah, like I said, that was my question. Basically, I wasn't complaining about them. I was just for verbiage. If we're saying they can't be seen from the street, there are houses that do have streets on the front and the back of them like that would be an issue.
Rick, that house seems green from Prairie Street as well with, I think there's arborvitae or something that blocks the sight line from Prairie Street to the back of the house where those solar panels are located.
Yeah, I don't know. I walk down there with the dog and I can clearly see them on top of the house, but it's, like I say, all I'm saying is I'm not saying they should take theirs down or anything. I'm just saying if we're going to do verbiage on it stating they can't be seen from the street, but we're going to permit them on the back half of the house, I just wanted to make sure that we're thinking, okay, there are some houses you can see from the street on both sides of the house. So does that mean my question is basically, are they outlawed in the future altogether? Or do we just say, okay, we'll make a special exception because, instead of not seen from the street, not seen from the front of the house or something of that nature? I don't know.
Yeah. Well, that was the basis of the administrative decision,
Right.
because when the original regulations were adopted, it was clear that it was the front of the house that was the issue, and so that's been our interpretation ever since.
Okay.
Go ahead, Heidi.
Okay, I have a couple of questions. So you're saying the front of the house as opposed to being seen from the street, because they're two different things.
Yes.
Okay, so the front of the house. And so you're saying you're not going to permit any solar panels on the front of the house, correct?
Facing the street, yes.
Yeah,
That's
facing
correct.
the street. So what about the solar shingles, which would encompass an entire roof, or the thin film panels, which if you have a standing seam roof, those are visible?
Right. Well, in the Plan Commission's recommendation, they didn't make any distinguishing comments about the type of solar collector. It was just a universal application of the prohibition for any solar collectors on the front.
Okay, because I would take issue with that, and I would think, because those are very different looks, if you get one of the solar shingle roofs, that's you can get an entire roof of that. And it looks, and it's a nice looking roof, and they're all solar panels, or certain ones, but you could have solar panels then on the front. And I don't think we should say, no, you can't have those necessarily, because you can't. I mean, that's the entire roof is made of that same material. That's like the Tesla ones.
Right.
It's like the thin film panels that fit inside like a standing seam roof. I would like to see some kind of distinction between that, or at least before we would make a decision, for the board to see some of those differences. Or I'd like to hear what, Jim Eckert has to
Okay.
say, with his reference, his ideas on those.
And
Can you hear me?
yes,
Oh, okay. So yeah, Heidi, one of the things about the solar roof again, what we were talking about before is the failure. I know I worked with Tesla before I left ComEd, and we didn't do a lot of work on the shingles yet. And I did work with NREL, which is the National Renewable Energy Laboratories. So it's the same kind of discussion where if you have solar shingles and you have them fail, so you got the back, they're called backsheet failure. So if you start losing them, you're going to have to get them replaced. So even on a solar shingle, you're going to have where they're going to discolor. And then also it wouldn't be the entire roof because I believe that you wouldn't be able to cover up until what is like 2 feet from the edge.
Right.
Right. So there is still that risk. And again, with the solar shingles, with these developers, once the incentive runs out, there's going to be a lot of developers leaving our community that won't service them anymore. So you could have a solar shingle that's failed and you can't get it replaced. So that's why, the kind of decision and discussion was about that, getting them replaced, making them look consistent, the damage. So even with the solar shingle, you still run that same risk. With thin film, same thing. They're always the same thing where if you have the failure, I fully support solar on the sides and the back, but on the front, again, that's where we have the issue is the failure out.
So how much of a color difference is it with a failure, or is it dependent on the say like the solar shingle color or type or the thin film? Does it depend on, like, say if I see those with the standing seam roofs where they look nice.
Right.
Does it depend on the standing seam roof color or something? Is there a way that the failure would be hidden, or I'm just trying to figure out?
Yeah. So I provided some pictures to the Planning Commission of installations, a couple of them in Aurora. They weren't the solar shingles. Again, the problem there is once they've been installed, they look great upon first, but after a period of time, we have hail. We have the differences as far as that goes. Fading will be different. Rick talked about the one on Cobbler, which I walk by every day. The developer ran conduit all over the place, but you can already see the panels that are on the west side that are already starting to fade in different ways. You can tell they've been manufactured by different models or different runs. But the back, like I said, the back sheets all start to fail. They start to fade different colors. The front screens, if you have a panel that is clear and then all of a sudden it goes to a grid pattern, you're going to have a grid pattern right in the middle of one, and it just won't look the same. The sizes will be different. The rails may be different. So that's why, again, on the front of the house, we took a vote and we weren't supportive of that. But even with this all new technology, next year we're going to be faced with more all new technology, with the hydro coming, or not hydro, but hydrogen cell technology. So there's a lot of different technology coming our way. We'll have to face it. But for this, I know it's strictly for solar, but you run the same risk. The minute they're installed, the fading starts. The developers are going to go away with the incentives, trying to get replacement to match the original. You just won't be able to do it.
Did you guys discuss any of the options of, I guess, the HOA being a control device for, each HOA? I know we don't have HOAs in all of our subdivisions, on what they would allow or not allow. Their concern?
Yeah, so when the Future Energy Jobs Act was passed, there's also a state statute that says you cannot ban solar from HOAs. You can make it where there are just so many criteria that there's no way you can comply with them. There's no way to ban them completely on HOAs.
Right.
So each individual one, and like you said, there isn't HOAs in one of them. And if you don't cover it, developers come in and they say, well, you didn't say I couldn't do it.
Okay.
Now for those facing the north or facing the street, there is community supply development. If you do want to participate in the solar panel market, and get some of your energy from direct renewables. There is community solar programs that were started with the FEJA, the Future Energy Jobs Act, that they can participate in. MC Square, even that's one that we talked about in the village. You can buy a subscription. So you can still participate. You just don't have to have the panels on the front of your house.
Okay.
And that was a good observation by the Plan Commission, I thought, was that there are ways for residents to participate.
Yeah.
Just confirm my question, Heidi just asked it, was with regards to HOAs. If my understanding is right, you said HOAs in that have that in their bylaws, if you will, to not have solar panels?
Yeah, that is, well, no, there's the state statute that says you cannot ban them, but what you can do is make them very prohibited as far as, how you install them, where you install them. But you can't do a general, they're not allowed, according to the state statute.
Recommendation by staff is to keep the ordinance as is, maybe modify it briefly. So I don't know if there's other discussion on. I apologize, I misplaced it.
John, if I may, just want to clarify it. I'm looking at Exhibit A on the attached to the board report. So question for Walter. So Walter, if I'm understanding where the what the Exhibit A that was shown would have been, I guess maybe what went to Planning Commission, where I'm assuming the redlined F is what the current ordinance says, and then the idea prior to Planning Commission was to replace it with the allowing roof-mounted panels on a front yard or corner side yard. But that as a result, the Planning Commission recommendation would it be to leave F as is, which prohibits them on the front yard or corner side yard. Is that accurate?
That's correct.
Okay. And so I think if I'm understanding, the only recommendation or change the Plan Commission is recommending would be into item 3 down below to eliminate the plan for demolition, and site restoration for level 1, which I'm assuming you might have mentioned earlier. Level 1 must be the just the residential installations.
Yes.
Okay.
Yeah. Hey Walter. Can I clarify for level 1?
The only last thing I had, Walter, is maybe you could explain just in one for me is that as that section 2 currently exists, you can't do them on roofs on a front yard or corner side yard. So that in Rick's example, even though the house has both a street in front and back, for definitions or this, is prairie considered not the front yard, that there's really only one front yard, or would that be considered 2 front yards? I mean, is that why it was allowed on prairie, because that is a rear yard even though there's a street behind it?
Yeah, because we don't, by definition, we only have a front yard and a backyard and a corner side yard. By definition, there aren't 2 front yards on a lot.
So if I lived on a lot on a corner, I couldn't do it on what people would call the front, typically the front yard or the side yard facing the other street, but I could do it on the rear. Correct. Or I could do it on the other interior side, if you will.
Correct.
Okay, just looking for clarification.
Yeah, so this is Jim again. So I just wanted to give you guys a reference when it says, for level 1 solar energy systems. So the way that the levels were set up is by the kW size, the kilowatt. So for level 1, it's 25 kW or less. So just to kind of give you some reference, a house like Chelsea Meadows, a small ranch, single air unit, they run about 5 to 8 kW. When you get to the larger homes, some that have the probably 2-story colonials with the air conditioner, but you may have some additional loading. So those are usually about anywhere from 12 to 15, maybe up to 17. And then the larger ones where you have the dual air systems and the bigger homes, Stratford Woods, things like that, you may go up to 25. Most than likely, usually those you'd still stay around the 17 to 20. So just give you a reference.
Thank you.
Mm-hmm. Thank you.
And, I would say that, Heidi, this is obviously a technology that continues to evolve, and it doesn't prohibit us from revisiting this on an annual basis or as technology changes. So if, I think the Plan Commission makes some valid points, but if new technology comes out, we could always revisit this at a later time if we go along with staff's recommendation.
Yeah, I was just going to ask Jim what he, since he's our local expert, what he would recommend for a time frame to reevaluate, because I think this is something that does need to be reevaluated at a regular basis because of the technology changing.
Sure. Annually would be great. Now, again, if we had, I know when I was working with some folks, Arizona Public Service in California, they got entire subdivisions coming in with all solar panels, roofs. And that's probably one that we probably want to reassess if something like that occurs. I kind of doubt it, but annually would probably be good.
Because I know California, I believe last year or the year before, they made the all new home construction had to have solar. So that's why they
did.
have. Yeah, so that's why they have such a big boom in solar, and that's why I think solar is going to just keep changing at a more rapid rate, and improving.
Right.
So, so you think annually is okay, and unless something drastically changes, and then we can bring it up again?
Oh, I definitely would support that. Again, I like solar on the sides, the back, just not the front facing.
The only thing I have with the front facing that I would like, the thing that pushes me is if you have the full solar entire roof system. I understand your concern on that, but I don't know how that's relatively new technology with the Tesla type solar shingles, but that would keep someone from having that type of roof in our town. And also standing seam metal roofs. I can understand your concern on that, that it would change the color as it malfunctions, or if it gets older or something, is what you're saying. Those are the only two that I would think that I would say, I wouldn't have a problem being on the front. But I have to defer to you as the expert probably if you think those have a high risk of failing and being discolored.
Yeah. So one of the things behind the program that makes it so attractive right now in the return on investment is that the state will actually pay you up front, but you actually sign a contract that you're going to keep producing power for up to 15 years. So you get the incentive for it to build your system. But let's say after somebody moves out, you put a system in, and after a couple of years, you move, you get transferred. The next person who moves in, that house is under contract to continue to produce solar. So you've already burdened the next owner as well, as far as they'll have to continue to produce the solar. They'll have to replace those panels. So that was just another little insight there. But to get back to your original one, yes, I'm very supportive of, let's come back every year and take a look at it. We're looking at roof turbines, the roof vents, they produce a lot of heat, the turtle vents. They were working on a roof turbine that would spin at the top of your roof. So that's another technology that you may have to look at next year.
Yeah.
So
if I can just interject a quick comment, what Jim's talking about, that the Arizona Power Service, I pay a monthly bill to them for our place down there, and solar panels down there are extremely common, but it only rains about 6 days a year there. So it's blue skies and sun every day, just about. But you don't see, even down there, I don't remember seeing any of the shingled roof type solar shingles. They're all the grids, and they even make you put them on the back down there. They don't let them face the street. The turbines are pretty common down there too. But they're more, instead of generating electricity, they're more for taking heat out of the attic. They got the turbines on top that spin in the wind to pull heat out of the house. But, and they're not unsightly either. And they have to be on the back of the house too. But it's certainly, I guess my question to Jim with this is, years ago when we talked about this, It didn't seem that solar was that great for our area because we didn't have as much sun. I mean, we have weeks and weeks of gray days, but the new stuff, it's still pulling some energy even out of the cloudy days, right?
That is correct.
Okay. Because I know we shut down the idea of wind generating stuff in the past too.
Yeah, wind generators are about 18%. When we model them on the transmission system, they're about 18% capacity factor. When you see a cloud come over, it can decrease your solar input by about 90%. Your inverters just sit there and go up and down and up and down. So yeah, it's weather dependent.
Okay.
Okay.
I'm sorry, President Michaels. Christopher Boyd has his hand raised and has asked if he could say a few questions. I believe he's a contractor who was with us. But Christopher, I'm going to unmute you, and then you can unmute yourself.
Christopher, go ahead.
Hey, are you guys able to hear me?
Yes.
Hi, so I know that I was present on the last meeting regarding, being allowed to try and put these solar panels on the front of the house. And, one of my biggest things that I've noticed during this call is initially, the biggest pushback on this is due to fading of the shingles, or fading of the panels, or if the panels are removed, the difference in fading of the roof. My biggest question with that would be, initially, shingles fade regardless. Siding on a house will fade regardless. So will a driveway. Initially, my question with that is even with the contracts with these incentives, there's a lot more to it than just a state incentive. There's a federal government incentive. There's an SREC incentive. And even within those incentives, if the homeowner themselves purchase the system and not lease the system, when they sell the house, the cost of the solar system gets added to the cost of the house sale. So when that new homeowner comes into the property, there is not a solar contract bill because it pays off the system. And then what that does is it still builds the SRECs, which is initially the equivalent to the actual stock market because they're based at a value per kilowatt that the system produces. So my question is initially with this, with the panels, to me, it seems like the only thing that is not allowed panels to go into the front of a house is if there's a panel that fades or, when a panel fades and if a panel or an optimizer stops producing initially, what happens with that? Well, within that contract, we have to promise the service of that system for the warranty that the company provides, which can vary between the panels, the inverter, and even the optimizers, depending on which piece of equipment it is. So initially my question is we do know that stuff fades, but, over time shingles fade indifferently as well, especially if you have colored shingles over top of just gray or black shingles.
I think the point is that a roof would fade all at basically the same rate as opposed to having shingles that are protected from the sun by the solar panels that don't fade at all, and then the rest of the roof does. But I think a point that Trustee Montalto pointed out that even in Arizona where solar panels are prevalent, they don't allow them in the front yards in Arizona.
Well, I'm sure that in Arizona it's the same situation as it isn't here in Illinois, depending on the municipality or whoever holds the jurisdiction within that portion of the state is who deciphers, where the panels go. And the question is has there ever been a conversation between contractors and those municipalities as to whether this is something that could maybe move forward? I do know that for a fact, I have never personally seen a solar shingle. The only thing I've ever seen about them is that there was a patent put on them, but they've never been produced to my knowledge. It more or less was an idea that came out by Elon Musk, and then it just seems that nothing has moved forward with it since then. But if you look across the board, even past California, there's regulations that are coming all around regarding renewable energies. And initially my question would be why not get in front of the ball game instead of be behind the ball game when everybody else decides to do it? Because even out of the 150 plus municipalities that I personally deal with within Illinois, The only other township that I personally deal with that doesn't allow panels on the front of a house is North Aurora.
Okay.
And that's initially where, I was concerned because, I do understand the idea of community solar and everything, but realistically, my thing is if somebody's wanting to purchase the house or purchase the system over top of lease the system, I think that they should personally be able to put the panels on the front of the house if it's south facing, because, realistically, if they're purchasing that system, right, we all know that if they're able to put them on the front of the house that's south facing, you're going to require less panels to install. Now, this is, not coming from a company standpoint, but this is coming from, an outsider standpoint that, with the more sun production that you have within an area, the less panels you're going to have to install into that home, depending on what the consumption of the electricity is, which means that the solar system is going to cost less. So, that's where the value of that builds into. Initially, obviously, you can't just justify it on what the contract is. But realistically, within your township, what percentage of the houses would you say the front of the house faces the south-facing portion of your township?
Can I jump in for a second, Sean?
Sure.
I think one of the things that is coming up here is, and I'm not sure where your house is, but
I personally live in Schaumburg.
Oh, okay. Well, like we were talking about earlier, the issue of HOAs, homeowner associations, they can't outlaw them, but they can restrict them. And I can tell you from an HOA's perspective, they would probably not want them on the front of the house because they're unsightly. They don't look like the other roofs. They're, whether they've got, conduit running up to them, they've got panels in different spots. It's for the same reason why boats and trailers aren't allowed in front of the house. The same reason why garbage cans have to be brought out at a certain time and brought back in at a certain time. So the front yards of neighborhoods they look uniform and not unsightly. And I think that's the biggest kickback you're going to get is from HOAs and things like that going, no, we don't want it. And they can do that whether we outlaw or whether we say it's okay or not.
Right. I do personally understand how the HOAs work. Initially there's a very gray area within the HOAs depending on what they can say yes and no to, depending on what the factors are, especially when it comes into what the production and savings is of a home. Because at the end of the day, if I'm not mistaken, they can't just go and say, hey, you can't put this on the front of your house just simply because it's the front of the house, and it being strictly a south-facing front portion of the roof where the most sun exposure is on the property. Now, what I have seen with HOAs, especially in Joliet, Romeoville, and Bolingbrook, is that a lot of them care more about where the conduit goes and what the conduit looks like than the panels themselves. That's the biggest thing that I have honestly seen is equipment outside of the panel itself on the property. Is, what is the conduit going to look like? Where's the equipment going to be placed at? And then to obviously make sure that we're within code within that, because, we can't just go put an inverter underneath of a window. And that's one of the biggest things I've noticed is that they're not too far pushy. I've yet to see an HOA deny a solar system simply for it being on the front of the house. The only time I've seen it be denied is when they can't justify which way the conduit's going to run onto the property, or they make a requirement that when the HOA approval is approved, this is the only place that we can put the conduit for the system of the home, which most of the times, if the house itself has attic access, we're going to run the conduit through the attic anyway. I personally can't speak for other solar companies because to my knowledge, we're one of the very few across the board that do attic interior or attic runs with conduit. But that's one of the biggest things that separates Vivint Solar from outside of other solar companies is that we do the attic runs and other ones don't. I'm sure that you hear things all day long of, hey, we do this and other people don't. But realistically, like even on our designs, when we do our survey, there's at least a 3-foot space in the attic for somebody to crawl around, it will automatically indicate on our drawings that we can do an attic run for the conduit.
Okay.
I want to just add one thing. It might not be a popular thing to say, but when you're living in a neighborhood, not on acreage, as all of us here are, and if my neighbor next door is putting up panels on their front house, front elevation of their home, and I live immediately next door and they're fading and they're not taking care of them and it looks bad, it makes my property look bad. So I think there's something to be said for someone who has chosen not to put solar panels on their house, yet living next to someone who has it on their front elevation. I think that's an important thing to note because I can't control what my neighbor, but the village can decide not to allow them on the front elevation.
Yeah, I agree. You look at the pictures that were part of the Plan Commission package, and it's not appealing to see from the front of the house.
Yeah, I know we talked a lot about fading, but I think that's the first issue is they're unsightly, and everybody may not agree with that, but I think majority do. So I think the discussion went to fading and damage and replacement. It just kind of further supported additional hurdles to get over, not just the unsightliness of them.
Good point. Okay, this was on discussion, so Walter, if you'd make the changes to the ordinance that you'd like us to approve, then you could bring it back for a vote.
Okay, will do.
Christopher and Jim for your input on this. Moving on, some discussion about the contribution to the Sugar Grove Water Authority. There's a request. Tony, do you want to fill us in on that?
Yes, the Illinois State Water Survey sent a proposal to the Sugar Grove Water Authority to continue their groundwater monitoring in the Sugar Grove Township, Village of Sugar Grove area. Their request for over 3 years is approximately $10,000. The first payment would be just under $4,000 for the first year, and we believe that this is an important program to monitor based on the information that was provided. So staff believes that we support this, and staff would support bringing an IGA to the next board meeting for approval to go forward with this.
Tony, this is for arrears. The contract is supposed to start in October of 2020 versus starting in October of 2021.
Correct. It started in October of 2020, and I believe that they're covering the first payment that was due while they're continuing to finalize all the IGAs. The Sugar Grove Township is a participant, as well as the Sugar Grove Highway District, since this does measure chlorides in the groundwater as well, which has to do with road salt.
And Pete Wallers from Engineering Enterprises has been instrumental in setting up the Northwestern Groundwater Association, and it's been supported. It's been duplicated down in the Joliet area, and as Tony alluded to, chloride's becoming a very big issue in groundwater from typical road salt or salt that retail establishments use on their driveways or parking lots. And, you know, for a Jewel or a large retail center to throw down extra salt just to get the ice off is easy, but then that has ramifications that they don't really see. So by monitoring the groundwater, that can help provide good information. Any other discussion?
I can bring that, we can put that on the agenda for the next meeting.
Okay.
I
See anybody?
believe we would recommend that it come out of the water fund.
Okay. Okay. All right. I think you have a consensus. Thank you, Tony.
Thank you.
Moving on to staff reports. Brent?
Sure, hopefully you had a chance to read the written staff report. Just one item on that portion I'd like to highlight is that we did, quote, lock in the topsoil broker for the spring to start the removal of the topsoil process piles out in stockpiles out in Hannaford Farm. We're currently drafting draft agreements just to outline, responsibilities in that. As you know, the village doesn't own the property for one, so we need some documentation on what the village's role will be, and I would envision that being some type of an agreement between the village and the HOA, giving the village the ability to on-site, kind of run the project, if you will. We're also looking at a simple agreement with the topsoil broker, and that may, at this point, I can't say, and Laura's working on it. I know she gave me a draft that I need to review. We may need something with the topsoil broker that may or may not be between the village and the broker, could be between the HOA and the broker. So there are agreements that we need to get in place, and I think we have time to do that. But that does seem to be that is moving forward. So we're happy to report that. Just two quick items that were not on my staff report. I think the board may be aware that Elburn at their last board meeting indicated at their next committee of the whole, which would be December 7th, that they plan to discuss a boundary agreement with Sugar Grove. I looked earlier today and that agenda hadn't been posted yet, which it's not required to be. It's, it's not, it wouldn't need to go out until to the 5th, but you might want to, keep your eyes out to see if that discussion actually takes place. And then last thing, I did speak with Representative Crown today. I reached out to them, just wanted to touch base and, see if there was anything of any significance going on. And essentially the response was not at this time. They have no imminent plans to propose anything for the property. Really, I would summarize it as saying status quo, at least as far as any discussions with them or non-discussions with them at this point. But I like to touch base with them every couple of months just to, see if there's anything new, and there isn't at this time.
Okay, thank you. Matt, anything else to add on finance department staff?
Nope, you got a lot of information from me tonight, but I don't have anything additional from my staff report.
Okay. Any questions for Matt or Brent? I apologize, I should have asked.
I'm just curious, Brent, if the broker for the topsoil pile gave you, I'm sure they don't have a firm time frame, but do they give you any sense of time frame on how long it would take to move that pile?
Well, I think they're hopeful that it could potentially be done in a single season, but they can't make any commitments. But unless I see Michelle shake her head no, I'm way off on that. My understanding is that, like I say, they do think it's a reasonable expectation to have it done, their portion of it done next year, but there's no commitment.
Okay.
And Brent, so Ryan, I assume have they been out to see it, test it?
Yeah, they actually have been out more than once because based on what we had heard from another interested party and what the stockpile, the composition of the material, we asked them to come out again to confirm that they believe that they have a market for, certainly the bulk of it, if not all of it. I mean, until you get into it, there may be sections that are, that are different, but yeah, they've been out, and I think Michelle, again, you can verbalize or just not. I think it may have actually been two people from the company that came out to look at it. So they don't have any hesitation.
All right, good.
Walter, anything to add to the community development department report? It's nice to see the chain link fence down around Prairie Point assisted living, so it's good to see that's done.
Yeah, I'll expand on that a little bit. The contractor virtually has completed all the building code issues and concerns in the building, and is in the process of doing all the punch list items for the owner throughout the building, all the not code related things to do in the building. And the construction fence, as you mentioned, has been removed in anticipation of the delivery of all the furniture for all the units. And at this point, all that's between, stands between a final occupancy now is actually completing the building to the owner's satisfaction, as well as getting all of the certifications and approvals from the other state agencies that have jurisdiction. So they're actively working on those. So, we're about as close as we've ever been to that building getting ready to open.
Good. Anything else to add? I was at Aldi, and a person there said that they plan on remodeling in March, not January. So I don't know if you have any update on that.
No, I don't.
Okay. Any questions for Walter? Chief Rollins, any thing to add to your police report?
Sure. You might be wondering, what is this bulleted item labeled Federal Use of Force Certification listed on the Police Department Board Report? Executive order on safe policing for safe communities was placed in motion during June by President Trump shortly after a number of police-related incidents unfolded across the nation. Behind the scenes, local and federal partners, along with the community stakeholders, participated in a nationwide initiative to enhance the trust of policing within our communities. This fall, the United States Department of Justice authorized and released standards for the Federal Use of Force certification. When the application notice came out, I applied the same day. These certification demands each agency meet certain requirements, adhere to all applicable federal, state, and village of Sugar Grove ordinances. It specifically prohibits chokeholds unless deadly force is justified, and to strive, I believe we have to strive to achieve 12 other recommended standards. The deadline for agencies to achieve certification is to be compliant by the end of January. This federal certification, though, is optional. It's not a requirement. However, we submitted our paperwork along with what would amount to a large stack of documented proofs to meet all the standards for safe policing for safe communities to the reviewing body. Sugar Grove Police Department, along with many of our fellow agencies in the state, we were already well ahead of those agencies around the country. I believe back in 2016, Illinois State already passed a law prohibiting chokeholds as a use of force for police officers unless deadly force was justified or is justified. So why is getting federal use of force certification important to Sugar Grove? Community engagement and trust is in the police department is a priority. In addition, local law enforcement desiring to receive federal funding for grants such as bulletproof vests and many other grants require us to fulfill federal requirements in order to apply and be eligible for grants. I'm happy to report that Sugar Grove Police Department met the 2 mandatory federal requirements, and also we excelled in being compliant in the recommended 12 other federal standards. So on the score sheet, we were 2 for 2 on the mandatory requirements and 12 for 12 on the suggested optional standards. Last week, I received notice that our federal use of force formal certification letter is on its way to us. So good news, and it will be valid for the next 3 years. As a side note, a reminder, I know I said this again, for the residents last meeting, please lock your vehicles and secure your garage doors. We are noticing a number of agencies around us, and including ourselves, taking reports for vehicle and residential burglaries. If you see someone or something that doesn't look right, call 911 immediately and report it. And specifically, I would stress to the community, let us, the police department, engage the individuals to find out what they are doing. This completes the highlights of the police department staff report.
Any questions for Chief? Jen?
I'm sorry, I have one. It's going to seem probably like a silly question, but I know that the speed monitors that are on Capitol Drive have come up. Residents have written in regarding the speed level. I was going to the grocery store, and obviously I saw like the regular thing was down and they're mounted to the pole, and I saw it and thought, oh, it's interesting that there's not a speed limit sign on this street. Well, I don't know if there is one, of course, but when you turn that corner, it's located so close to Bliss Road that if you're driving and you're crossing traffic and you're making sure that there's a car at the intersection, you're going around it, by the time you actually hit straightaway, there's not a sign. There's not a sign all the way to Galena. So I don't know, it's just me, a resident driving, that maybe that's oddly placed. Is there a rule that says it's supposed to be so many feet onto a road? It would make more sense to me by the time you're juggling traffic once you're going to see a speed limit sign versus so close to that intersection. That's
valid.
Just a local observation. I don't know if there's a rule with that.
I'll jump in. There's a couple of rules that apply. Just a reminder, and it's okay. And just as a reminder, in the residential area in Sugar Grove, even if you don't see a sign that's posted, it's 30 miles per hour by state law. So bypassing it and not seeing it, we just want everyone to comply in the residential areas. Unless otherwise posted, it's 30 miles per hour in Sugar Grove. And then I know the village of Sugar Grove follows the standard, the federal standard and where the signs are placed, but it's something that we can look at, and if we need to put additional signs up, I'm sure, as you said, you might not see it being that close, but just from the initial numbers that are traveling on that road on a daily basis, it is a major thoroughfare through the village. People are taking Capitol, which is understandable, versus getting out to 47 and heading south to go into the shopping center or to get over to Galena and head eastbound onto 56. So we're talking thousands of cars a day that are traveling in that stretch, which if for one side being residential at this point, they see a lot of traffic there. So,
Hey, you know what else I noticed, and I don't know if we brought this up before, but with Capitol, I've seen it happen a number of times. When you go 47, if you're going northbound, when you hit Galena, if you get a red light, the green light to turn right is still available. So if people want to go to Bliss and turn right, when they hit that red light at Galena, they got a green light, they turn right, they turn left on Capitol, and they shoot to Bliss that way to avoid having to sit at the lights.
I've seen that.
Yeah, and I see a lot the reverse going south. They'll go Capitol to Galena to 47. So, okay.
I have one other question.
Good.
I'm not well versed in speed limits in all areas, but what about by a park where children play, even if it's in a residential, and so residential covers 30. An officer out of Aurora told me that, and I don't know if this is right or it's what he told me, that when the speed limit by a park is supposed to be 25 miles an hour. And I'm asking because Wheatfield is a very hot road and there's a park on Wheatfield. And if we can reduce speeds on Wheatfield because it's supposed to be 25 by a park, then that should be posted, because I don't believe that's posted. But so I'm asking, I don't know the answer.
I'll do some investigating and get back with you, but I don't, I know Aurora is a home rule community and maybe that's what they have established, but under the state law, you can set up certain restrictions in front of parks, speed limits. So you see them in other communities. But right now, I believe Sugar Grove has not looked at that yet. We've looked at reducing our speed limits throughout the rest of the subdivisions a few years back. But I don't believe we've addressed, to my knowledge, anything that, about speeding or the speed limit in front of a park.
And then talking earlier, Chief was talking about the use of force. Chief and Brent and myself have been meeting roughly quarterly to review any use of force incidents or any complaints against officers so that we can see if there's a pattern or anything that might seem out of the ordinary before it becomes an issue. So I appreciate the Chief's time on meeting on that.
Okay, as long as we were talking about signs, can I ask one more quick question? I don't know if it was the last meeting or the meeting before we had authorized no through traffic signs for Mallard Point. They have not been put up yet. I'm wondering what the timeline is on that.
Rick, they're up already. They went up last week. Sorry, go ahead, Tony.
That's the first thing on my report. The signs are up.
Really? We drove around the corner tonight and didn't even see it. My wife said, when are they going to put up those signs?
That's the highlight of my report right here, that those signs are up.
I'm sorry.
Good segue. That's a good segue into the Public Works report. Tony?
Okay, thank you. I'd like to report that the no-through traffic signs are up in Mallard Point. Also, I'd like to report that November 17, 2020, Kane County's 2050 Long-Range Transportation Plan public comments were due, and I included those in my report, the public comments for that Kane County transportation report. Just a reminder, I see a lot of questions popping up. The quiet zone at Prairie and Gordon should take effect by the end of the year. A lot of people think that it happens instantly, but they do have a grace period while the FRA is reviewing that. So we hope that it is actually in effect by the end of the year to go forward with that. We did have a snowfall November 24th. The pavements remain clear. We didn't need to apply any treatment to the pavements, but we did salt some of the sidewalks around the facilities because they did get a little bit icy. And I know we did talk a little bit, well, 10, we hope to have those parts installed and that back in service by the end of the year. That's all I have at this time.
Tony, I don't see it on your report that those signs were installed. You might want to. Well,
I wrote it out because they got installed after I typed the report because we had Thanksgiving, so I had to get the report in early.
Well, thank you for doing that.
All right.
But, any questions for Tony? Okay. Trustee comments? Jen?
No, I would just ask, in light of our lengthy discussion this evening with the property tax levy and the surplus, that maybe we can have a discussion that we're planning for ideas and thoughts on the use of any surplus dollars. That if we could have a board discussion maybe next meeting, and we can bring those ideas back and share with each other. That's the only thing I wanted to add.
I'd say any meeting that's appropriate with the surplus that we have. It doesn't necessarily have to wait for one particular meeting in light of the surplus. But, we talked earlier that there are expenses that might not be seen with snow and ice removal, things like that Rick pointed out. But we can always take it under consideration, and if it's a good one, act right away or put it in next year's budget. Nothing else. Heidi?
Got unmuted. I have nothing except for I just wanted to thank Jim Eckert for all his wonderful information, and we are truly lucky to have him on the Plan Commission to help with the his expertise on stuff like the solar panels. So I really appreciate him helping us out here.
Okay, thank you. Yes, that's true. Rick?
I'll just expand on the last meeting. I think I said we had 2 of our bands booked for Groovin' in the Grove and a third one possible. We did shore up the third band, so we've got June again is the Chain, which is the Fleetwood Mac cover band. July, we have Rico, which is a Santana cover band. And for August, we were able to get Secondhand Soul, which is a Motown, funk soul type band. They literally changed the date. It turned out that they had a date at the Arboretum. I thought it was Cantigny, but it was the Arboretum they were booked for that night. And they called and changed the date at the Arboretum so they could come to us that night. So I thought that was great of them. I've made calls to food truck vendors, still waiting for a response from the Little Red Donut Truck. JB's food truck has locked us in for all 3 dates they're going to come. Our Bernie's Bully Dogs are victims of COVID. They've sold their equipment and decided to retire, so we've lost them. But we'll be looking for somebody to replace them, or possibly an ice cream vendor or something like that. But everything's fallen into place, and we'll keep our fingers crossed that COVID will be behind us. Other than that, I've got a meeting Thursday morning of the Convention Bureau. So don't have any details on that yet, other than the meetings at 8 a.m.
Okay.
Rick,
Yes.
just as a side note, Heritage Prairie Farm on 38, where they do those pizza nights on Wednesdays in the summer.
Yeah.
They have the Good Humor truck, and it's a gentleman. He comes and he looks like the Good Humor man in a uniform, and he drives a white truck, and he sells the ice cream. It's all Good Humor ice cream, reasonably priced. We actually had him in our neighborhood block party before, and he's happy to do it. He does it with his wife.
When was the last time you saw him? I tried contacting him last summer, and he had some health issues and wasn't doing it anymore.
Oh, well, I haven't been able to get in there because they're very restrictive now in the way they sell their pizza.
I've seen him at some car shows, and I got his information. I tried contacting him, but there was some health issues, and he said he wasn't doing it. So I don't know if that's changed or not, but we can certainly try if you can get his info again.
Okay, I will try.
Okay. Ryan?
Nothing, thank you.
Okay, Sean?
Nothing to report. Thanks.
Okay. President's report. I don't know if they're doing it, but I was contacted by the Hindu Association that's up at the old Girl Scouts facility in Pressbury, and they were talking about having a COVID testing site or COVID testing this Saturday. If we get any information, we were going to share it. So they were going to offer it free of service to the public, and I think based on their parking lot, it worked out well. But I haven't seen any follow-up, but if we do get something, I'll pass that on. And then, again, it's just good to see the fence down at Prairie Point. I think that's a big step forward to get that place cleaned up and looking good. So, all right. Any other public comments? Jim's the last one left. Hearing none, no airport report, and we've gone to executive session. Could I get a motion to adjourn?
I will make that motion.
Second.
Second by Trustee Herron. Roll call, please. Alice.
Trustee Montalto?
Aye.
Trustee Herron?
Aye.
Trustee Lundy?
Aye.
Trustee Conan?
Aye.
Trustee Walter?
Aye.
Okay. Meeting adjourned. Thank you, everyone. See you in 2 weeks.